Welcome back to the Success Blueprint. We are excited to do the monthly market update. I'm here with my business partner, Jason Grider, and he is the master of numbers. So we are going to get right into it. Jason,
I don't know about master of numbers.
What is it as we go through some of these things? What are we seeing? What's some of the exciting updates that we have for this month of September?
Well, first of all, this month, I think the biggest news is obviously the Fed. The Fed did drop a quarter point. So that was pretty anticipated that they were going to do that. But last minute, a lot of people were a little bit worried if they were actually going to go through with it. But they did, which is good. And interest rates, so mortgage rates actually were anticipating that. So they actually have been dropping the week or two prior to that. So the last 2 or 3 weeks before that drop, we actually saw rates slowly come down. So it's a good thing that it actually did drop, because if it didn't, we might have seen a little bump up. But the way it is now, we're close to 6 for most 30-year notes.
And so what I also like to tell people as well is the mortgage rates are huge, right? And that's what everyone familiarizes the market, right, is with the mortgage rates. But what also is the commercial rates. The commercial rates are usually always higher than the actual mortgage rate or what you're going to get for your home. So what does this mean? When you are trying to pencil a subdivision or apartment complex or storage units or whatever it may be that is a more of a commercial note, these 0.25% go off of the Fed, and so they adjust off of that. And so what's exciting for me is if we can get the rumor is a couple more drops by the end of the year. And so if we can get a couple more drops, if that's true,
I don't know. It'll kind of depend on how this one plays out, right?
Right.
So we'll see what happens. I mean, this is the first real drop this year, right? So since early in the year. So we'll see what happens.
So if we can get that money affordable, we'll be able to move more larger scale deals. And so I guess where I'm getting at is a 0.5%, a 0.25% drop. These different things make a huge it's a huge deal for somebody who's trying to put together a deal and trying to make sure that the numbers work, right?
Yeah, for sure.
So the math has got a math, and this is going to help it.
Yep. Well, and it always, typically the mortgage rates follow that 10-year Treasury yield pretty closely, and they have in the past as well. So the 10-year Treasury yield is at 4.39 right now, and we've been kind of steady on that this last year, and so it's held fairly steady this year, but we did see just a slight drop. So it is good. And with that drop over the last few weeks, we've seen nationally, at least, there's been a huge influx of refis. So those people who got in the last few years are maybe at 7 or even 8% when it was 8 for just a little bit. It's a great opportunity for them to refi. And depending on your situation, if you're going to do a full point drop, that might be worth it. Because obviously you got to take into consideration if there's closing costs. Every lender does a little bit different. Some do a 0 closing cost refi, not quite as low as it is currently. It might be a little bit higher, but it may be a good option for those people who bought in the last couple of years to look at those options right now.
I agree. And one thing that we do know is as rates are, we want them to come down. Everybody wants them to come down. But what that means typically is everybody's excited for payment, right? Everybody's more conscious about their payment and what that will do for their families. As we always say, and what we know is sometimes as rates go down, property values creep up, right? The supply and demand, the demand happens more. We create that frenzy. So it'll be interesting how much lower they drop and how fast they do it, because we can't do it too fast or it's going to boost everything back up to what we saw a few years ago.
Yeah, definitely. Obviously the last few years we've seen just a little bit of softening in our property values. The one thing that's interesting about that is, as we talked about, is the average home price in Idaho. I've seen different reports that show different numbers, but one report showed Idaho as the 10th most expensive state per median home price in the nation, which is pretty crazy, because Idaho used to be a pretty affordable place to live even 10 years ago, but it's grown really rapidly. And so the fact that we're already up to number 10 is pretty crazy. Everything around us is obviously higher. Utah, I think, is number 5 or 6. And then, of course, California is number 1, along with Hawaii and that. So it's kind of interesting to see how we've definitely gone up that scale, and we're getting closer to those markets right around us. Part of that, on the average, or the median home price, the average home price right now in our MLS is $445. And so, which is definitely an uptick. In fact, it's the highest it's ever been. And we've talked about that. That doesn't necessarily go along with exactly the home value has increased. Our home values have not increased this last couple of years. However, the higher interest rates haven't affected people in that higher income bracket or people purchasing those luxury homes as much as they have maybe the starter homes, right? So there's less starter homes being sold, but more luxury homes being sold. So it increases our average without necessarily increasing values. Because as we know, values have slightly dropped over the last couple of years.
So with that being said, Jason, what, I guess to wrap this up, when somebody's looking to sell a home in the market that we're currently in, you being the best listing agent I've ever seen, what is it that you're seeing and what's the advice that you'd give somebody, right? Because somebody's going to look at the average sales price and they're going to be like, oh, wow, that's the highest it's ever been. The market's going up. And so what is some of that advice that you give them?
I think it's just really being realistic with the comparables. When you're looking at comparables that have actually sold around you, be realistic with those and comparing your home to others' homes. Being objective. It's really hard to do as a seller because as a seller, you've done things to your home that are awesome for you, but they may not always translate into sales price. And so I think just being realistic with that, because we're seeing homes sell very quickly that are like the average days on market right now, for instance, in Bonneville County is 49 days, right?
Right.
And so 49 days on market, we know, most homes aren't selling at 49 days. Most homes are selling in the first 2 to 3 weeks, or they're waiting until quite a long time to sell if they don't do price drops, right? If they even sell. And so that's something we can touch on as well as the back on the market or the removing from the market expired or withdrawn listings, which is basically people who gave up.
So expired and withdrawn year over year for the 3-month comparison. This was a shocker to me when we brought this up with the team.
Yeah.
Is that we are at 482 expired or withdrawn. And so when we look at it from our standpoint, it's either something that was a niche, which price can dictate that, right? You can always sell anything. Or agents or people are trying to get yesteryear's price, and they haven't really came to the realization that their home is not worth what they think it is. And I like what you said. When you're talking with an agent, look at the comps. What's going on? What's going on in the trend? And it seems like I wouldn't use 6 months comps. I wouldn't use, unless that's all you have, I would try to get what's going on now. What's going on in the last little bit? What's selling? And that helps dictate what your home is worth, whether it's good or bad. That's what it.
Absolutely.
That's what it is.
Well, and for years, when you're in a inflating, when your market is actually increasing and the values are increasing so rapidly, like they have for the 10 prior years to the last 2 or 3, then you can look at comps and say, oh well, yeah, let's be a little bit optimistic and maybe price it slightly above that,
right? And
it may sell. But when we're in a declining, it's almost the reverse of that, right? So when you see all of those, you almost have to price it at or slightly below where those sold to get it sold. Otherwise, you'll be chasing the market down and sell it for even less than that. And that's not what we want to do. You want to maximize what we can get no matter when people have to sell or want to sell.
So I guess another question is, now a good time with the interest rates and everything like that that we're seeing? And as far as real estate goes, is this a good season to sell your home?
I think so. I think it's a great season to sell or buy your home because home prices, they have softened as we talked about, but they haven't softened enough to where it would prevent you from selling. Anyone who's been in their home for longer than a couple of years, 2-3 years, probably has some decent equity in their home still. And because it hasn't gone down 20%, 10%, it's moved a little bit, but not terrible. So it's a really good time to sell, especially if you're looking to make that move into something else. It was probably holding you back before because you had a really great interest rate. we're very unlikely to see the 2s and the 3 interest rates again in our lifetime. I mean, obviously you never know, but it's very unlikely that'll happen again. And so right now, getting to where we're in the possibly high 5s right now for well-qualified buyers, that's probably where we're going to see it for the next year plus.
Well, and you said some things that I like, and one of the things that we've talked about is if you are looking to buy a home in the next, I would say, from now or 2 years from now, and you're waiting for that right market or you're waiting for that right home, what I would encourage you to prepare now so that when that right home or that right interest rate or whatever it is comes available, that you're ready to act on it. And so sometimes we see everybody so reactive, and so we're like, hey, interest rates have dropped, or, your house came on the market, and then everyone's trying to get their taxes done, or they're trying to get, all of these different things, debts paid off, so that it can equal out a little bit more on their debt to income ratio. And I would just encourage you to just start setting that goal so that you are prepared, because you will be able to capitalize, whenever it is that you're ready, as long as you're ready.
Absolutely. And if we see, so we've sold our market about 10%, 9.8% were up from total sales over the previous year, right? So 2025 year to date is up about 9.8% over 2024, which 2024 was kind of an all-time low. Right. We'd been declining for 4 years essentially in the total number of sales. And so this was a turnaround, right? We turned around, we're up over last year. And so if this continues, and most people expect this to continue, especially with rates being so stable this year. We were in the high 6s almost all year until just recently when we dropped to low 6s or high 5s. So right now is a great time actually, because the home prices are still where they're going to be. They haven't started escalating yet, but if we do another 10% next year, like we did this year, they'll start to escalate. So then values will start to go up. So, and who knows where interest rates will be then. Most likely they'll still be in the 6s, but we'll see.
And when people will say, well, then I'll wait for my home to go up to sell, that's what everybody hopes or wants. But just remember that you're trading. So if you wait for your home to go up, you're buying a home that's also gone up. Yep. And so it's just a trade across. So just also remember that. And
if your goal is to get into the next house with the lowest payment, you'd rather get in while that home's price is low and interest rates are at a decent rate, right?
Well, and that's when we talked about refinances and having friends and doing this so long, having friends in the lending industry. Refinancing is something that I don't feel like is talked enough, or I feel like it's almost talked about too much, so I feel like people don't realize how easy it is to refinance. And so if you were to lock in yesteryear at a high interest rate, well, when the interest rates go down, like we talked about, so you're prepared, you're ready to go, you can refinance and get that lower rate, right? And that's something, to talk about even now if you're buying, to see how easy it is to refinance with that lender. The second thing is sometimes lenders are always pushing. I mean, if the rates adjust a little bit, they're like, hey, you sure you don't want to refinance? And I don't feel like that needs to be a big thing too. Like what you said, there's fees, there's different things that go on with that and costs that are associated with that.
Yeah, you definitely want to run the numbers on your own scenario, right? Because most refinances are going to have some closing costs. And so you don't want to just jump in, pay those closing costs, and then it's not saving you enough to really make that up quickly.
Correct.
You want to make those up fairly quickly so that you can continue on. And so it's really individual on their individual situations. Sometimes your lender, depending on who is actually who you're paying, because obviously most loans are sold, but depending on their programs, they may have a no fee refinance. Those sometimes you don't get quite to the lowest rate, but it's lower than what you currently have many times. Right. And so sometimes those can be worth it to look into as well, because those are typically very simple. It's not a matter of having to totally go and it's not a brand new mortgage, right? It's just refinancing that, and they make it fairly simple for you. So if you're in those 7 to 8 interest rates in your home right now, it's probably worth it to take a look. Especially, I mean, if you're saving 2 points, you'll save quite a bit on your payment.
Well, to wrap this up, I can't say it enough. Just make sure you're prepared, being able to purchase a home. Things are going to be coming along the line, and we're excited for the years to come. One quick plug: if market stats is something that you're interested in, definitely reach out to myself or Jason or a member of our team, and we'd love to put you, as we run these stats monthly, give you the current local market stats that Jason pulls up every single month.
Yep, we do those middle of the month every month. So let us know if you want that, or if you just want to know what's going on in your own neighborhood. Let us know. We can definitely let you know what's selling, what's not, what's the prices they've sold at, and things like that. So you're just have your pulse on the market, so that you're more informed when you do make a decision to make that move.
And as always, we are excited and happy to be your local real estate experts. So if you know of anybody looking to buy, sell, or invest in real estate, please give us a call. We're happy to work with them. If you even need a handyman or a painter or something, we want to be that resource for you. So if you're curious about what your home's worth in this fast moving market, reach out. We can give you a free market analysis. We are excited to work with you. So anyway, thank you for tuning in to the podcast, and we will chat with you soon.